Hi there. I'm Savannah Mexto with Manor Law Group, and I'm excited to welcome you to another webinar Wednesday with esteemed elder law and estate planning attorney, Robert Manor. On today's webinar, Bob will discuss an important yet not well-known topic, Michigan's most recent insurance law changes. And there's a dog also encouraging this. What should you know before you buy or renew your auto insurance? Now, many people are not aware of these changes and that they can seriously impact your physical and financial health. Now, before I pass the torch to Bob, I'd like to cover a few housekeeping details. Now, first, a disclaimer. Today, you're going to learn a lot. We're definitely going to cover a lot of information, but you're not going to receive specific legal advice. I encourage you, if you are looking for legal advice or if you have questions about your specific and unique situation, please contact us after today's webinar. Now, also, if you have questions that pop up about something that Bob mentions, I do encourage you to leave your questions in the chat box today. We will review questions at the end of today's webinar. We'll definitely save time. If for some reason we don't get to your question, we will contact you after the webinar. Please note that today's webinar is recorded as well, so we will send out a replay tomorrow. You can share that replay link with your family and friends. Now, why should you listen to what the folks at Manor Law Group have to say? Now, first, you should note we're a nationally recognized and respected elder law and estate planning firm. All three of our attorneys are accredited by the Veterans Administration to assist veterans with claims and appeals. Attorney Bob Manor is nationally board certified as an elder law attorney by the National Elder Law Foundation. He's one of only 19 attorneys in Michigan to achieve this designation. He is currently on the executive board of the State Bar of Michigan Elder Law and Disability Rights Section and past president of the National Academy of Elder Law Attorneys, Michigan chapter. Now, one of my personal favorite reasons, Manor Law has been honored by readers of our local paper as the best or favorite law firm for the last 8 years in a row. Now, without further ado, I'd like to welcome attorney Bob Manor.
Hi, folks. This is a great topic, and I'm glad that we got a lot of interest in this. As if you know me or have met with me, you know that I tend to have opinions, and I'm going to give them today about the new law and some action items about what you should consider or what our advice is. So as Savannah mentioned, you can't consider this as personal legal advice. It's everybody's situation is different. And so you can't consider this as personal legal advice. This is going to be general information, and but I am going to actually start off with giving our general recommendation, which is actually a strong recommendation as far as what you do and what coverages you have going forward, because I think there is a significant danger in the new law that I want you to be aware of. So I'm going to give pretty clear advice. And so I decided sometimes when we get to this, and I've talked to a number of folks now about their concerns about this new law, and one of the things is that it seems like there's really conflicting information, right? And so there's a lot of information out there, and some of it seems conflicting, and it's okay, well, is this going to be where we have potential where we're going to get sued? Well, what about, don't I have medical coverage? If I have medical coverage, why do I need this other coverage, often referred to as PIP coverage? And so I'm just going to cut to the bottom line. Right from the very beginning, I'm just going to get to the bottom line. Now, I encourage you to stay for the whole hour, but if you only got 5 minutes, I'm going to tell you the answer. And this is my advice, and you can take it for that. But I strongly recommend everyone keep the unlimited PIP coverage. That's personal injury protection coverage. And I'm going to go through what that means and what the details are. I'm going to show you where on your bill for your car insurance that it is. But it's a very strong recommendation, and I think particularly for my clients, one of the things that we're always talking about is care, right? How are we going to pay for care? How are we going to get good care? How are we going to make sure that if we need round-the-clock care, we're going to get it? Well, in Michigan until now, we always had this special coverage that no one else really had, or if the reason why you needed that care was because of a car accident. And there was problems with that, but we're gonna, but unfortunately, I think the their solution was is going to cause more problems, and we're going to get into why. So my final answer is I strongly recommend you keep unlimited PIP coverage, the personal injury protection coverage. So sometimes they call it catastrophic coverage. I strongly recommend that you keep the MCCA coverage, which I'll explain what that is. And then I strongly recommend that you don't select the managed care options. Under the new law, the insurance companies have an option of saying, okay, well, you can save a few bucks by allowing us to say, yeah, we'll cover you for whatever extent you have the coverage, but you have to use our doctors and you have to use our, our selected hospital and things like that. I don't recommend that. I recommend that you keep the coverages we had before the change in the law, and I actually think this was a bad law, which I'll talk about in a little bit. And this is not political, A lot of times, today's going to be a little bit different than my typical presentation, because usually I'm just kind of explaining the law. Occasionally, I'll put my 2 cents in about my opinion about the law, but today is really going to be explaining the law, but also it is going to be filled with my opinions, and they're strongly held to the extent that I really think that a lot of folks are going to try to save a few bucks, and it's going to, for those that do get in a car accident and get seriously injured, it's going to have such a negative impact. And so, like I say, this was a bipartisan change in the law. Both sides agreed to it and had, a great amount of support. Unfortunately, some of the talking points that they used just weren't real. So one of the things that we hear people talking about is, well, why do I need this extra coverage? I've got health insurance. I've got Blue Cross. Hey, I got Medicare, right? I'm over 65. I've got Medicare. Well, the problem is the coverage that is here is much better, thorough, deeper coverage than you're going to get under Medicare. And one of the talking points that the politicians used to pass this was, oh, well, it's okay because, if we run out of coverage, you can always get on Medicaid. So I'm a Medicaid attorney. We do a lot of Medicaid, but I can tell you, it's not the best the options, because if you have the option of going into a nursing home and getting coverage in a nursing home versus having a home health aide, attendant care, or even having the insurance pay for family members, to provide care for you. You don't really have those options under Medicaid. You have there's some, but they're much more deficient. They're a lot less care. And so that's my final answer. So I'm going to explain why. Okay, so that's the first question. I just want to cover a couple questions. What's our recommendation? And then the second question, what about lawsuits? Because that's the big one that we've been getting a lot of calls on this lately to say, okay, well, what if I get sued? Is there going to be issues here? Is my trust going to protect me? And so I'm going to talk a little bit about that. And so what I mean by that, and also what options you have for lawsuit protection. I'll tell you the standard trust, just to answer that question, and then we'll get into a little bit more detail. The standard trust, the revocable trust, does not protect you from lawsuits. Okay, we have asset protection trust, but the standard revocable trust, the normal trust that most people have, even most of our clients have, does not protect you from lawsuits. Okay, so that's why it's important that we're going to be talking about liability here. All right, so my first thing, I want to give credit where credit is due. I started putting together a presentation, and I realized that someone at Olivet College had already put together a pretty darn good presentation. So if you're so inclined and you want to see some of the source material, you can just Google Tom Humphreys at Olivet College. Now, their presentation is going to be a little bit different than mine, because mine's going to be more about, he doesn't say, this is what you should do, and I'm going to say, this is what you should do. As far as coverages, so it's going to be a little bit different. But he goes into it in much greater depth, that he's part of the Risk Management and Insurance Center at Olivet College, which I imagine is probably partially funded by the insurance industry. So just be aware of that. But I thought it was a very thorough presentation, and I'm going to sample it generously. So I just want to give credit where it's due and point out that this is where I've gotten a lot of the slides that we're going to be talking here. Okay, so what is the first thing? So I mentioned you should have the unlimited coverage. That's my recommendation. And you, again, bottom line is you do what you want, but this is why. We're going to talk about this is why. This is why I think it's so important that we have unlimited personal injury protection coverage. What does it pay for? What is personal injury protection coverage or PIP coverage? Well, it covers allowable expenses. And when we say unlimited, we mean for the rest of your life. So if you get in a car accident and you're injured for the rest of your life, or let's say you're disabled for the rest of your life, you're incapacitated, maybe you are in a wheelchair, or you have you need 24-hour care for the rest of your life. Sometimes this can happen for a 24-year-old or an 18-year-old or a 14-year-old, or the rest of your life is a long time. And so that's why unlimited personal injury protection coverage is so important, because when we look at any of these other limits, and it seems like a lot of money, boy, $500,000, boy, that seems like a lot of money. But when we think about it from the standpoint of, okay, but this isn't just for a year, this is for the rest of your life. And so that's why unlimited personal injury protection, which you still have the option to choose, okay? You have the option to choose, and we're going to talk about that. I'm going to show you where in the bill it will show it. But so what is allowable medical expenses? Well, it includes things like doctor's visits, hospitalization, surgeries, physical therapy, rehab, vehicle modifications. So things like wheelchair, making your vehicle wheelchair accessible, modifications that allow the individual to operate a vehicle, home modifications, including ramps and bathroom accessibility, even some forms of elevators, medical mileage, reimbursement for transportation costs, and seeking medical treatment and care. So that's what the allowable expenses is. So some of the time people say, well, okay, that's Bob, and so people get so focused on that, they're saying, well, I have that coverage. I've got Blue Cross. I got this great Blue Cross plan. I've got Medicare and Blue Cross. I've got all of this. Well, that first bullet point, some of that is going to potentially be covered under Medicare or Blue Cross. Now, the reality is that under the PIP coverage, often it's better and more thorough. But the PIP coverage also covers work loss. You say, well, I'm retired. Okay, well, it covers work loss with a 3-year limit up to 85% of wages, replacement services, survivor's benefits. So if you die in a car injury, it provided some survivor's benefits. But the big one, and this is what is most important and people are overlooking the most, and even in the presentation that the source presentation that I talked about from Olivet College, they kind of overlook this attendant care. Attendant care is the most important in my mind. So this is what we're talking about with folks all the time. Someone that it wasn't just a car accident and they have dementia, or they have Alzheimer's, or they have had a stroke, or they had whatever else it is. And we're always talking about, okay, but this person needs help on a daily basis, sometimes 24 hours a day, often many hours a day. And that's what I help people with. I help people get that coverage either under Medicaid, or we get some money from the VA, or maximize our Medicare benefits. But the bottom line is, with this PIP coverage, that can supersede all of that. And the thing is, prior to the change in the law, that meant for the rest of your life we might have attendant care. And that attendant could be your mom, or it could be your daughter or your sister. It could be a family member, and you can even get family members paid as attendant care. This is a program that's not going to be available by any means under Blue Cross. It's definitely not going to be available under Medicare or Medicaid, okay? And it's a lifetime benefit, potentially, where you get to stay in your own home. So there is, this is both, this PIP coverage is both the reason probably why they decided to change the law. And then secondly, it's the reason why I suggest that you continue to pay for the extra coverage for unlimited PIP coverage, because, and there's a lot of people, a lot of industries where they have adult foster care homes, or PT, or others that their whole business was based around this PIP coverage, because a lot of these companies only took auto injuries. And the thing about it is, it's both good, because now we can, potentially this person is injured in an accident and they potentially could get unlimited, physical therapy, or they could get, physical therapy for many years, but you're not going to get that under Blue Cross. You're not going to get that under Medicaid or Medicare. But you could under the PIP coverage, and you can continue to, if you choose and pay for unlimited PIP coverage. But here's where the problem came in. So the providers knew that it was unlimited coverage, and often they would charge more if the injury was a result of a car accident than they would if it went through Medicare or Blue Cross, because they knew Medicare or Blue Cross was going to not, they're only going to pay this much for this service. Whereas under the if it was an auto accident, so if you've ever been to the doctor and you call up, I had rotator cuff surgery a few years ago, and the first thing they ask is, hey, was that a result of a car accident? Sometimes when you go into the hospital, you go into the doctor, they say, was this a result of a car accident? Because they literally used to charge more if it was a result of a car accident because they could. And so under Medicare, they don't, they could charge more, but Medicare says, no, we paid this amount for this service. And for Blue Cross, they say we pay this amount for this service. So a lot of times, and so that was, I think, a negative of the old way. And there is actually a change in the law as it relates to that too. They did put limitations on doctors' pay and things like that for that. But that was one of the big reasons why they changed this law, was because they felt like there was some abuse there, where there was people, that they were getting paid a lot more for those services. Now, in reality, some of the PT, companies and things like that, they wouldn't stay in business without it, and though they're very well needed. So if somebody has a brain injury, so they had a car accident, they had a brain injury. Well, boy, I get it. It does cost more to deal with that, and so and continue PT and really help this person through the rest of their life potentially. And so I don't want to comment too much on whether or not the people were charging too much for that. My point is that was the perception, at least. That was the perception, and that's one of the main reasons why they changed the law. But this is so important that if you were in a car accident and you are going to need 24-hour care for the rest of your life, or you're going to need an attendant, or you're in a wheelchair or whatever, what is the alternative? Okay, so some people say, well, I don't need that. I can give up this protection because I've got Blue Cross. I retired from GM. I got Blue Cross. I got Medicare. I got the best coverage out there. Well, no, this is much better. Blue Cross, Medicare, Medicaid is not going to do it. And one of the things that the politicians, the talking point that I heard over and over again with regard to this was, hey, worst case scenario, people can just get on Medicaid. And, first of all, a lot of times you're going to end up having to, one of the things we do is we help people protect their assets and still qualify for Medicaid. But a lot of times you're going to have to spend down some of the assets. If you don't have proper legal advice, you might have to spend down all of your assets. So you completely lose everything. But the other thing is Medicaid doesn't pay for all the stuff that the PIP coverage does. It doesn't pay for a home health attendant 24 hours a day. It doesn't pay for unlimited physical therapy. It doesn't pay for a nursing home. It does pay for a nursing home, but it doesn't pay for like there was a lot of people that got the auto coverage, and they had their adult foster care. They could stay in their home, and they got the help in their home, and it was unlimited and for the rest of their lives. And so, and there's this is insurance. This isn't the money's coming from your tax dollars. That's not, to be clear, this is not where the attendant care was being paid for by your tax dollars. It was insurance. We all were paying into it with our insurance check, and so only a portion of us had that car accident where we lost our legs, or they had that car accident where we had a serious brain injury. And so it worked out. And there's, I can get into the details of that, but the main point of it was, this is not tax dollars. So this is not a tax issue of, my goodness, I don't want to be paying, to have somebody have a personal aid so that they get to stay in their home for the next 50 years. Well, that's not you paying for that. That was the insurance company paying for it. And that's what it was set up for. That was what the program was set up for. Now people said, oh, okay, well, Michigan car insurance is more expensive than other states. It's because we required better coverage. And so it's to be very clear, this is not a tax issue. This is not a issue of, well, I don't want my tax money going to somebody on disability. That has nothing to do with it. That's not what this is about. This is simply insurance. So the attendant care is one of the big things that I think is important. So this is the options now. So the options now is you can keep unlimited PIP benefit. And this is what I'm recommending everybody does. Keep the unlimited PIP benefit. Now, mandatory PIP premium rollback under the law is that even if with the unlimited PIP benefit, it's a 10% reduction in your premiums. So you'll get a small deduction in your premiums, but it's you could get a bigger one if you chose a limit or opt out of coverage altogether. Okay, so we're gonna get out of that. We're gonna get into that. I've got a bunch of calls lately about people saying, well, should I just opt out because I have the health insurance coverage? I'm gonna cover that in just a second. The answer is no, shouldn't. So I'm recommending that people do the unlimited PIP benefit. Here's my worry. This is what I'm worried about. So the state mandated that at least for some period of time that they're not going to make this unlimited PIP benefit outrageously expensive. Okay, I'm worried over time that protection will go away, one way or the other, either through insurance company playing with the rules or a change in the law, or they're just, I'm worried that they're just not gonna, that too many people will see that they can save $5 or $100 or whatever, and they will decide to either completely give up the PIP coverage, the opt out of the PIP coverage, or there's just not going to be enough people in the pool. That's how insurance works. The whole point of insurance is enough people are pooling in to pay their insurance premiums that we're going to be able to cover they need us. Okay, and so for the people that actually need that coverage, that's how insurance works, right? And so if the fewer people that have that choose that coverage, the more expensive presumably it's going to get, right? So if that pool shrinks, it's a smaller and smaller pool because too many people are not realizing that this is good. Now they've prevented that for now. They said nope. For the insurance companies, that was part of the deal when they passed this. They said no, you got to offer unlimited PIP benefit. But I think I just can't imagine if too many people don't choose unlimited PIP coverage, that it's not at some point gonna get real expensive. Don't have to worry about that for now. That's just something I worry about. Okay, but you don't have to worry about that for now. Right now, the answer is pick the unlimited PIP benefit coverage. Your insurance might even go down a little bit, but not necessarily a lot, whereas other people will get a bigger reduction on their insurance, but they have less coverage. So then these are the other options, right? You could just say, okay, I want PIP coverage, but I want $500,000, and then you're going to get a 20% reduction on your PIP premium. Boy, that seems like such a bad idea. I mean, a lot of people think, oh my gosh, $500,000. That seems, but I was at the hospital and it cost this much, and how many hospital visits would you need? It's not just about the hospital visits. It's all those other things. It's the rehab. It's the unlimited rehab. It's the attendant care. It's the home modifications. It's the car modifications. It's the physical therapy for the rest of your life. It's the occupational therapy for the rest of your life. All of those things. $500,000 would be gone so quickly, and it's not going to cover for very long, and it would be gone now. And then you can get a 35% deduction if you go down to $250,000 in PIP coverage, and then a 45% deduction if you go down to $50,000 in PIP coverage, and enrolled in Medicaid. So again, I think these are that would be a really bad decision. Worst decision, and honestly, any of these would be the worst decision, but you can opt out of PIP coverage altogether. And this was, I think, really not well thought out when they drafted this law, because they said, okay, well, if you have coverage, if you have hospital coverage, if you have health coverage, and it has to be qualified, so it has to be where there's not an exemption for an auto accident. But if you have Medicare, A and B, if you have separate supplemental insurance, if you have insurance through work, some people say, oh well, boy, I can save 100% on my PIP premium because I've already got that coverage. Two problems with that. Number one is that coverage is not going to be as thorough. You're not going to have unlimited physical therapy. You're not going to have, it's going to be based on the rules of Blue Cross. It's going to be based on the rules of your insurance plan. It's going to be based on the rules of Medicare or Medicaid, and it doesn't cover as much, okay? God forbid it. And this was one of those things that people, when the talking points on passing this law was, well, people have health insurance coverage. Why are they paying extra for this? Well, because it's not just about, first of all, it's not just about the health insurance. It's about the attendant care. It's about the modifications. It's about all of that. But secondly, that coverage isn't as good. Okay, they're gonna limit your rehab to 7 weeks. They're gonna cut that off after a certain period of time. Whereas with the PIP unlimited coverage, they don't do that. You can you can continue to get your physical therapy. You continue to get your assistance with the brain injury and things like that. So I just think that, and this isn't, I'm not trying to be doom and gloom here, because most other states have never had this. We had a extra benefit that other states didn't have. So I'm not trying to be gloom and doom, but it just seems like we gave up a really good thing just so people can get a little bit of a reduction on their car insurance premiums. So yeah, so let's look at that. So this is, I thought this graph was interesting. It's just kind of, okay, well, here's where the coverage is. So really the one that says the unlimited coverage. So what we have is the insurance covers the first 500. This is getting a little technical. I didn't feel like everybody needed to know all the technicalities of where does the money come from. So the money comes from, if you choose the unlimited option, it's going to be the first $580,000 is going to come from the PIP benefit, and then it goes into this MCCA, okay? And I'll explain what that is in just a second here, but this is unlimited, so it really should have gone through the screen here, because it's unlimited. It's not where it's capped at $1 million or whatever else. But if we choose one of these other caps or opt out completely, we're not going to have, my view is, and if you're really seriously injured, you're not going to have the coverage that you're going to want in that situation. Okay, so I just mentioned under the last slide this MCAA. So on your bill, and I'm going to show you a sample bill in a second, there's going to be one line item for PIP coverage, and then there's going to be another line item for MCAA. And so the point of that is, if you opt out, you can save both. You're not paying for PIP and you're not paying for MCAA. Okay, so I mean, there is some dollar savings. I still think it's not even close to being worth it, but there is some dollar savings if you do that on your premium. But then if you get in a car accident, you can't always control if you're going to get in a car accident. Obviously, you might be a great driver, somebody else can hit you. You could get hit by a drunk driver. There's just no way for you to have control over that. So you can be a passenger. So let's talk about this. So Michigan Catastrophic Claims Association, that's that MCAA. Basically this is that fund, this fund that we have in Michigan that pays for the unlimited benefit, okay? That they don't have this in other states. And so the current annual assessment per vehicle, this was a per vehicle dollar amount, was $220 per vehicle, okay? So under the new rule, that assessment per vehicle is $100. So that was one of the deals. They're saying, okay, we're gonna, the talking points was, we're gonna cut everybody's car insurance. And so, okay, so you cut it by $120 for the year. But honestly, what did we lose? What are we losing here for that $120? But here's the thing, that's just, it has to be the assessment for now. They have the ability to revise this fee. Okay, so this year it's going to be $100. This is what I'm worried about. But the MCCA price, they have the ability, so customers won't pay the MCCA fee if they choose to, if they don't choose unlimited coverage. So if you choose any of these other options, if $500,000, $250,000, $50,000, or opt out, then you don't pay this $100 fee. So you save, potentially you save $220 a year. All right, per vehicle. So again, you got 3 vehicles. Again, it's but it could add up. I'm not saying, I'm not discounting the savings, but I'm just saying, what are you giving up in exchange for it? So The assessment per vehicle is $100 this year. You don't pay that at all, even if you don't choose unlimited coverage, which I recommend you do choose unlimited coverage. But they do have the ability to revise that fee in the future. So this is one of the things I'm worried about, to say, okay, are they going to make this where it's not cost effective for us anymore? I guess we'll cross that bridge when we get there, right? We'll cross that bridge. And again, we always have the backup. So not a lot of people that need unlimited care, they're going to need care for the rest of their life, or attendant care. They don't need it because of a car accident. And so we've been dealing with that for 20 years now. I mean, the world's been dealing with it for a lot longer, but me as a lawyer has been dealing with it for 20 years about, okay, well, how do we get you coverage? How do we get you Medicare or Medicaid coverage? How do we get you veterans benefits? So there's always that backup. What I'm telling you is that backup isn't as good. It's not going to be as much care. It's not going to be as thorough a care, as detailed a care. And there's a lot more limits on how much care you can get under those programs. All right, so I've been promising you this. We're going to actually take a look at your bill. So this is an example bill, and this is where those two things show up. So it's one is, under the coverages, we're going to be looking at personal injury protection coverage. Okay, and so this is full medical and full wage, so that's full coverage as identified there. And then we've got this MCCA, MATPA, which is another part of it, but it's they group those together. It's they group those fund payments together. So, but that's the bottom line. So if you choose unlimited PIP, then you're going to also pay this MCAA fee, and then they threw in this MATPA fee too, and they combine. You can't have one without the other. So that's it. That's where it shows up. That's where you know whether you have the coverage or not. So just thought I'd show that right there on your bill. What about lawsuits and liability? So this is a lot of questions. So a lot of people, when they heard about this, they're worried that okay, well, what if I get in a car accident and now I'm at fault? Is there gonna be, am I more exposed than I was before? And the answer is yes. But one of the things I wanted to talk about was this is important, of course. And we have insurance for it, and we're gonna, that we've got options in our office to protect your assets, to protect them from lawsuits. And that's not the standard trust, but we can talk about asset protection trust. Before I go on, I do want to talk about one other thing, because one of the talking points about when they passed this law was they were fixing a problem with the old law. And the old law allowed the insurance companies to charge more based on where you lived. And so people that lived in the city of Detroit were paying outrageous insurance premiums for their car. And so the idea was this was try to fix it. The problem is the fix wasn't really that great of a fix, because they said, okay, well, we can't do it on location, but we can do it on these other factors. So they can charge outrageous fees, outrageous premiums based on other factors, that they can really narrow it down to saying, okay, we can't say it's because you're in Detroit, but we can pretty much make sure that people in Detroit still pay outrageous premiums. It didn't actually solve the problem, because they didn't say you can't do it based on societal factors or where you live or geographic areas or things like that. They said you can't do it based on the zip code, is basically what they said. And so now there's other factors that they can look at and say, okay, well, pretty much people in the city of Detroit are still gonna, their insurance is, everybody's just gonna go down a little bit potentially under this under these laws, but it's not going to make it so the fairness situation is fully answered. They did still make it so that they can make determinations about premiums based on a variety of factors that they could very easily pinpoint and say, well, if we have these factors, that pretty much means they're in the city of Detroit or in these more high liability areas of the state. So I just wanted to mention that because that was another talking point as to why this is a good law, is to even it out, make it a little bit more fair. And I don't think the law actually addressed that in any real way. It was talking points. It was lip service because the insurance companies still have the right different premiums based on a variety of factors. Okay, so let's talk about lawsuits. All right, so torts. I know this is a little blurry here, but I'll mainly, we'll just kind of walk you through it here. Torts. Torts is a funny word. Law students always, torts is basically personal, lawsuits, right? Torts are most lawsuits, most personal injuries. In law school, they call it a tort. And so they, will often hear things like tort reform, and that's basically personal injury lawsuits or medical injury lawsuits, things like that. So in the big change here, so the big change here is that a person injured in an automobile accident is still able to seek damages for pain and suffering in excess of the PIP benefits after July 2nd, 2020. With potential reduction in PIP benefits, motor vehicle owners and operators may be liable for a significant dollar amount to an injured party, which was not the case prior to this. Okay, so now a lot of folks are saying, okay, I got the coverage, but I got the PIP coverage, but what if the person that I hit doesn't? And you're right, this is a potential for more lawsuits and potentially exposing yourself to some liabilities here. So we're going to talk a little bit about that. What can you do to protect yourself? Before we get there, I want to talk about mini torts. So under the current rules, this was small claims, right? So I remember as a kid, 18 years old, somebody rear-ended me, and I looked into it, and I had out-of-pocket expenses because it was mostly covered by insurance, but there was a deductible and all of that. And I was working, well, I guess I wasn't 18, I was probably like 20, because I was working for a law firm. I was a runner. I would go and run their mail for them, and I'd run up to court for them, and I do all these types of things. And so I had an opportunity to be hanging around some lawyers at the time, which is why I wanted the job, because I knew I wanted to go to law school. And I was asking one of the younger lawyers, I said, okay, I got hit, what do I do? Can I sue him? And he was like, well, not really. We got this thing called mini tort, we got no fault. And but it was under current law prior to July 2nd, it was a maximum recovery of $1,000. Well, they've now changed that to $3,000. Okay, so just be aware of that for the mini torts. And then you can get coverage on that. I wanted to show you on the bill. So this is the first line of defense, right? So the first line of defense is going to be, let's just make sure we have proper insurance coverage. And I get it, not everybody's going to want the same, so this is not as strong of an opinion as wanting you to keep your unlimited PIP benefits. This is just a thought to consider. And so these are the ones that you're going to be looking at. The residual bodily injury, you can set the limits. So if you set lower limits, the premium's going to go down, and that's your personal preference on that. I guess my general recommendation is set a higher limit, but that's not as strong of a recommendation as it is of not having the medical coverage that I want you to have. Residual uninsured motorists coverage, and so that's the person you hit doesn't have proper insurance. Okay, well, now what are you going to do? So we want to make sure that we have good coverage for that. And again, you could have a lower maximums and pay a little bit lower premium. Uninsured motorist coverage, so underinsured and uninsured coverage. So those are, and you just set those limits. So this is the first line of defense. If you're worried about lawsuits, you're worried about that, you might want to up your limits. So previously in no fault, maybe you would have had a lower limit. I don't know, but this is your comfort level of how much do you want to have on that. And then this special tort liability to cover that $1,000 or now $3,000 that would be under the law as of July 2nd there. So, oops, should have turned my phone off. Sorry about that, guys. All right, so what does this mean going forward? So there's a couple of things that these are, you know, honestly, I want you to talk to your insurance agent about this. This is not my area. I've done some research on this, but I'm not an insurance agent, and I want, and you know, so I've read the law, but I want you to look into this because the coverage, this is something I'm concerned about. Coverage no longer extends to named individual or named insureds, non-relatives who live in the household or relatives who do not reside in the household, even if listed as drivers. So we have a couple of examples here. And this again comes from the Olivet College presentation. Children or adults who are using your vehicle titled in your name, but have established residency somewhere else. So for example, if they're in college, okay, you're gonna want to talk to your insurance agent about how, okay, if they're in Ann Arbor or they're in East Lansing or wherever else, you know, Central Michigan, whatever, how do we make sure that they're going to be covered? If they're driving my vehicle, how do we make sure they're going to be covered? So talk to your insurance agent about that. Living with somebody who is not a spouse or a relative who does not have his or her own insurance. In other words, they're driving your car. So, you know, someone living there but it's not a relative, and they're driving your car, are we going to have coverage that? So again, you have that situation, you're going to want to make sure that you've talked to your insurance agent to figure out how do we make sure that they're going to have coverage. Okay, so this, I thought I changed this slide actually. Okay, yes, I did. So I was talking to somebody earlier and they said, make sure you cover motorcycles. Well, I don't know a lot about the motorcycle coverage. Again, you're going to want to talk to your insurance agent about that. But I did see this, that there is one distinction on the motorcycle coverage versus other cars, that the order of priority on the PIP benefits, you know, what PIP coverage covers it. And so you know, previously or up for the next couple weeks, there was the order of coverage of, you know, where do you collect your PIP benefits from? You know, whose insurance policy do you collect your PIP benefits from? They've simplified that for other vehicles, for non-motorcycles. We're going to talk about motorcycles differently, and that's where it's the who pays the PIP benefits, whose insurance company pays the PIP benefits. And the first line of defense is the insurer of the named insured. Okay, so the second is the insurer of the spouse or resident relative. So this would be your spouse or kids. So you have the coverage of, so you're the driver, you're the name insured. That's the first option. The second option is your spouse or your parent or whatever, if it's a resident relative. And then the third is the injured person applies for benefits through the MACP, but that's going to be the limited to the $250,000. That's why, again, they create some potential for additional liability there. So for whatever reason, they have motorcycles actually kind of follow the old rules. So we have this current, where does the PIP coverage come from? First, it comes from the insurance of the owner or registrant of the motor vehicle. Then it's from the operator of the motor vehicle. If they don't have coverage, then it goes to the motorcycle operators, the operator's motor vehicle insurer. Then it's the insurer of the motorcycle owner or registrant's motor vehicles, and then it goes to the Michigan assigned claims plan. So I'm not sure why they did that differently for motorcycles, and I don't know necessarily about the additional other rules with regards to how motorcycles are different. It's something you're going to want to talk to your insurance company about. But I do know that, again, there is that possibility of some liability there that wasn't there before. So I know that's a lot of information. I just want to recap here and just say my main purpose in doing this, I'm not an expert on automobile coverage. I've never done personal injury law. I don't do no-fault law. But this was significant enough to my clientele to say, hey, I have some advice for you. And that's when you renew your insurance, when you get new insurance, that you keep that unlimited PIP coverage. The other advice, so I'm going to narrow down the last 45 minutes down to 2 pieces of advice. Keep the unlimited PIP coverage or the personal injury protection, or sometimes they call it catastrophic injury coverage. Pay the MCCA fee. If you have the unlimited coverage, you have to pay that anyway, so you don't have an option. And then the second point, so that was one point. The second point is, be aware of your additional potential liabilities now under the no-fault changes. And so if you are worried about it, obviously the first line of defense would be to increase your insurance coverages and increase those maximums. The second would be if you want to do asset protection. And so a lot of the asset protection we do for most of our clients is going to be surrounded around protecting assets from a nursing home, right? That's or protecting assets to qualify for veterans benefits. But we can use those same techniques to protect from lawsuits. It's a little bit more complicated. It's a little bit different. The rules are a little bit different. There is actually a whole other area that we can talk about. So a few years ago, Michigan passed this Michigan Asset Protection Trust. And the Michigan Asset Protection Trust in other states, there's lots. Nevada Asset Protection Trust. There's other states have these. And so sometimes, and I've even had lots of attorneys ask me this because they know that I do Medicaid and veterans benefits, and they'll say, oh, well, we're just going to throw everything in this Michigan Asset Protection Trust and that's going to protect us from the nursing home. Absolutely not. Nope. That Michigan Asset Protection Trust does not protect from nursing home. It's very clear on that. You cannot use they call it Domestic Asset Protection Trust, or in this case, it's the Michigan Asset Protection Trust or the Nevada Asset Protection Trust. You can't. That will not help you protect assets from the nursing home. It doesn't work that way. It can protect if you're doing it right from lawsuits. But the asset protection trust that we use that does protect from the nursing home can also protect from lawsuits. Okay. So if this is something that you're worried about, definitely reach out to us. We can walk you through what it would take to upgrade your trust to an asset protection trust, not the Michigan Asset Protection Trust. We're still not going to use that because if we're going to do this, we probably want to protect it not only for lawsuits, but also from nursing home. Obviously, that's something that we talk a lot about. And if something you need more information about, Savannah's going to talk to you about how you can get a free interview with us. We'll just do a kind of a quick interview to see whether, what your needs are and if we're going to be able to help you. So Savannah's going to kind of talk to you about that. But before we do that, I wanted to see from Savannah if we have any questions.
Yeah, thanks, Rob. So it looks like we do have a question. One was sort of a comment, and you did already touch on this. So I'm going to actually hop right into the question. And you did talk about this, but I think it would be good just to reiterate, just in case. So the question is, I've heard we might need even more insurance than unlimited to protect us from being sued by someone who has the lesser insurance option. Is this true, or is this a rider for those who for those who choose a limited option?
Yeah, great question. That's actually really good because sometimes I get focused on this and I fail to break it down to say, okay, these are two separate issues completely, right? And they are, and it's really important, but everything kind of gets merged together. So that's absolutely correct. And I try to make sure that I'm making things as clear as possible, but I realize those easily got merged in. And so there's two separate issues here. Right back from the very beginning of the presentation, we talked about, okay, what about your health? What about your care? And then what about, lawsuits and liabilities? So I'm just going to kind of go back to this real quick just to show you where on your bill it'll talk about it. So when we're talking about unlimited PIP benefits, that's this. This is for you. This is protect you, okay, right? This is for your health. This is to make sure that you get, if you got a brain injury from a car accident, that's why I'm suggesting unlimited PIP benefits. But then the separate issue, which I'm not as strong about, but I agree with the questioner that you may want to think about having higher protection. That's a completely just separate line item on your insurance. So those are, you could choose to get unlimited PIP benefits and then have lesser liability coverage. I wouldn't recommend that, but those are going to be different line items, and these are all the things that add up to how much you're paying for car insurance. So my general recommendation is that you get good liability coverage here, and then also unlimited PIP benefits. But my stronger recommendation, just because it's the area of law that I practice, which is helping people that are that need 24-hour care or need a lot of care, that's my biggest level of interest, is making sure you have those PIP benefits. But certainly liability protection is there too. I was talking to Kelly King-Penner, one of the other attorneys in the office, and she was suggesting that maybe people might want to also consider an umbrella policy in addition to their car insurance. So certainly something that you can give some consideration to. But again, that's all going to be personal preference. Any other questions?
All right, thanks, Bob. That wraps up the questions for today. Thank you.
All right, well, I'm going to have Savannah take over and kind of tell you what to do next here.
All right, thanks, Bob. And as Bob mentioned earlier, we do have a way for you to contact us. So you should have just a few minutes ago, or maybe even right now as we speak, you should be getting an email. And it's just following up from today. Now, it does have a very easy way for you to contact us. You actually will just click a blue button in the email, and it will take you to a calendar. You'll choose a day and a time that you would like our team member, Katie, to give you a call. During that call, which should last about 15 minutes at the most, and it's free, completely no risk to you. During that call, Katie will ask a few questions to kind of get an idea of what it is that you're looking for, some of your concerns, and how we can best help, and which attorney would be the best attorney to meet with you. During that call, you can also ask us questions. Maybe there's something that you want to know about our firm, or you're just curious about the process, but you can decide if we're the right firm for you. And that 15-minute phone call will give you that opportunity. So again, check your email and go ahead and click that button. Now, if you're in the future and you're watching the replay, you won't be getting the email, but you can always give us a call at 810-694-9000, or you can visit our website, www.manorlaw.com, and you can contact us directly from the website. Thank you again, everyone, for attending, and we will see you next week.